Hey guys, welcome back to another video. So if any of you have watched my previous two videos, it's clear that we are in an uncertain environment right now in the investment community. So the next logical question to ask is, how do we play an uncertain market? And I just wanted to share a few points around how my thinking goes whenever the market and the volatility goes up. So first and foremost, let's take a look at the VIX index. So let's show you the VIX. Now, this is the VIX index on the S&P, and it gives you a measurement of volatility in the market. The higher the VIX, the more volatility and uncertainty there is in the market. As you can see, we have gapped up tremendously here. That's over 20 to 25% here, getting up to 25.67. From here, we're at about 20. So a massive gap up in the volatility index. And that means that traders, investors, institutions, hedge funds are uncertain about where to put their funds right now. And what's the reason behind this? Again, please do go check out those other two videos. But in a nutshell, we've got a lot of things going on right now. We've got Jerome Powell speaking tomorrow and the day after at the FOMC meeting. We don't know if tapering is going to be on the cards. Now, the market is expecting that perhaps there won't be any tapering, but we don't know, right? And that's what creates uncertainty. We've still got the backdrop of Delta. Again, uncertainty. We feel like we're on a path to improvement, but we're not sure yet. Creates uncertainty, and therefore consumer spending behavior, investor behavior changes. It's uncertainty. That's one thing investors do not want. We've seen crypto down. Why? We've seen the Evergrande crisis at the moment. They're in 300 billion debt, and there's fears that that could be the Chinese Lehman Brothers. We also know that a lot of the European central banks are talking about tightening monetary policy and perhaps tapering there as well. So that we have a whole bunch of geopolitical issues at the same time, and there's just a lot of fear going on. Not to mention the fact that the US has their debt ceiling crisis, which is, a bad time for them to be playing chicken and playing politics on such an important issue, which could undermine the recovery which has been fought after so hardly this year in 2021. So with that, what do we need to do? And the first step you always want to do, which is always my thinking whenever I see a period of uncertainty, is I go back to my high conviction plays. I flick through my portfolio and I ask myself, do I have true conviction in this? If this was to correct right now, if the S&P corrected 5 to 10%, maybe more, and individual stocks were to drop 20, 30, 40%, would I be cool? Would I be comfortable? Would I be holding through that dip? And if my answer is no to that, that is not a high conviction play. And I need to start coming up with a plan of how to unwind those positions. Because in an uncertain market where a 40% correction could be a reality in any given stock, we've got to make sure we have high conviction in them. Otherwise, we're going to panic sell, realize a 30, 40% loss, and we're going to suffer, right? Our gains will suffer. So once you've done that, you want to identify what those plays are, and you need to come up with a strategy about how to get out of those and rotate into your high conviction plays. For example, if you have a slightly riskier play, which you're not too sure about, but in a green market, you were loving it, it was doing all right for you, but you're not sure, maybe you're down 3 or 4% on it, or you're just slightly up on it, and you're not sure, you don't have high conviction in it. Now's a good time to rotate that into a higher conviction play. So for example, if that's crypto and you've got a riskier coin, let's say a Dogecoin or something else, and you're not too sure about it, you can rotate that into a Bitcoin. So any of these kind of coins where you were, I'm not saying Dogecoin specifically, but any of these coins where you didn't have conviction with it, or you were doing it as a play around or just risk some money or etc., rotate them into your high conviction plays. In the case of crypto, thinking about your Bitcoins, your big caps, your Bitcoins, Ethereums, Cardanos. In the case of equities, think about your blue chips. Do you rotate across into Amazon, Apple, more cash-like assets? And that's what brings me on to my second tip, which is you want to keep cash on the side. Okay, and by cash, I don't necessarily mean hard cash. I know a lot of investors like to keep some hard cash. I like to keep cash-like assets, which I can quickly convert. So for me, I'll keep a lot of my excess cash in Apple, Amazon, Google. These are good plays where it's not suddenly going to just change overnight, and it's a good steady stock that if I then see a good opportunity in a Lemonade, in an end phase, in a Coinbase, if I average down on a Coinbase or any other play, I can then liquidate my position in a Google, Apple, or Amazon, and I can top up on the dips on those plays. And that's what we want to do. But we don't want to do this recklessly. Yeah. So a lot of, some YouTubers out there will advocate in an uncertain market, sell all your positions, wait for it to fall 20%, and then buy everything 20% cheaper. Yeah, theoretically sounds great, right? But in these instances, this is a great example. This Evergrande crisis is a great example because this could be resolved in the next hour. The CCP, Chinese government, could come out and pay the 300 billion off, print it out, pay it off, and the market will just recover, right? Because the only reason the fear is here is because of that crisis. So if they resolve that issue, the market will start to recover. And therefore, you will never then re-enter because it climbs 5%, and the human nature is, it's now 5% too expensive. No, 10%, 10% too, and you've just lost all your positions, and you should have held instead. So my advice is hodl your high conviction positions. Don't try to play games unless you're very experienced. Don't try to play games of selling and coming in cheaper. If you have high conviction, 5 to 10% over many years on your high conviction plays is going to end up negligent. So it's not negligible. Sorry. So it's not it's not important to be worrying and risking your plays on that. So what you want to do, let's go back. You find your high conviction plays, you keep a cash basis, right? So you're either rotating your weaker performance into your high conviction plays, or if you're not sure, you got enough in your high conviction plays, you have enough in Tesla, or you have enough in Google, Amazon, your big boys, then take that money and put it in some cash, okay? Then keep that money ready to buy any dips on more riskier, more upside potential stocks which you see. So for example, you see an M-phase dip below 140 and it's dipping at 130, 120, 110, you want to start buying that in. And that's when we come on to our third point, which is we don't want to enter our new positions recklessly. Start writing down your high conviction plays, the ones that you want to enter in at, if you see a good dip, okay? So these are ones where you don't feel like your position is built out quick enough. For example, for me, I love some more Solana. I bought a good amount, a cost basis 28s to 30s, but I want some more, right? And then as the price got to 200, it became very difficult for me. So now I know I'm going to take Solana, I'm going to keep my cash on the side, and if Solana hits certain points, I'm going to nibble in. I'm not going to go all in though. If Solana drops 5 to 10%, I'm not going all in. I'm going to nibble. If it goes another 10% down, I'm going to nibble a little bit more. If it gets down to 100, I'm going to go much heavier. If it goes below 100, then you can top up your bags to the level you want to top them up to. And that's how you want to play it for stocks as well. If you didn't have enough M phase, let it drop down. Does it get to 120? Nibble. 110? Nibble. How far does it go? And then you nibble it. And you just kind of set those price targets in your head of how much you're going to purchase and when, and then you stick to it because you don't want to be emotional. In a high volatility market, and I can see the VIX ticking up and down in front of me, you don't want to be emotional. You want to already have your plan there, your cash to the side, you know what your high conviction plays are, you know which ones you want to buy on the dip, not just kind of, browsing through your Robinhood account going, I think I need to buy the dip now, but I don't know which one, I don't know what price, it feels like a good price. No, have it clear, know at which prices you want to buy, and then start nibbling, okay? And if it gets heavier, if the price goes down more, you can top in heavier, but definitely do not just go, it's 10% down, I'm putting all my money now, I've bought the dip. Because then if it falls another 10-15%, you've had it. So you need to average down and get a good cost position in these. Now, then if the market turns the other way, we have to account for this. If the market turns the other way and goes straight up, great. We've built enough position as we could. If it went down, it would have been nice to get some more, but that's investing, right? And now we go to the upside. We're not going to be complaining. But you will, if it dips and then comes back down again, you didn't take opportunity of that dip, that's when you're going to feel bad. So, this works two ways because one, you don't want to be holding any risky plays into a correction. Right? Anything which you're not comfortable about, like I said, you don't want to be holding into a correction. So get rid of those low conviction plays. And then that cash is the beauty which will let you buy dips on your more higher conviction plays when the opportunity arises. So it's a great time for you to consolidate, rationalize your position, rethink all the key kind of things in your bag. Because when the market goes well, we all do this. We end up having random stocks and random altcoins in our portfolio, which, if the market goes down, we kind of just bought it because everything was going green and it's not really a high conviction play, or perhaps we didn't do our research enough into it. We didn't have that much conviction into it. We just went for it. So it's go through everyone will have those, go through, see where you can rationalize some of those positions. Start exiting out on some of those and getting into some more high conviction plays because those are the ones which you will not panic sell. I mean, hopefully nobody watching here is going to panic sell Bitcoin if we fall back down to 30, right? Because if you're investing in Bitcoin, your conviction should be high enough that this is a long-term play, right? Similarly for your Amazon, Google, maybe Tesla if you're into Tesla. For me, N phase, I'm not selling my N phase if it falls to 70, 80, 90. I'm ready. I'm buying more, right? So that's what I mean by high conviction play. So there you go, guys. That's the plan for this market. A lot is going on. Evergrande crisis, FOMC meeting tomorrow. Are we going to get tapering? We know the Delta issue is still there. On top of that, they're playing chicken with the debt ceiling crisis, which maybe can mess up the US's credit rating, which would be an absolute disaster. I don't think that's going to happen. I think they'll resolve that by mid-October, which makes this a perfect recipe for a mini correction, right? And if it's a mini correction, it's a great time to, you know, prepare ourselves. It's good practice because you always get a situation like this, right? You will always get these kind of situations where you have fear, uncertainty, and doubt. The market goes into uncertain mode. The VIX ticks up like we can see here. And we need to know, what is the game plan? What do we need to do? How do we prepare ourselves? And hopefully this 4-step process will help you structure your thinking around what to do instead of just kind of panicking and just going with the flow of, oh, CNBC are scaring me, I need to sell some stocks and all this. Make a plan, know what you're going to do, and then act without emotion. Hope you enjoyed this video, guys. If you enjoy content like this, please don't forget to hit the like button and subscribe, and I will see you in the next one.